And we're live. So excellent. Thank you so much, everybody. The last but not the least panel on DeFi. So we've had a fantastic 2 days of Blockchain for Europe Summit. We have heard really interesting topics about combining, about stable coins, about the latest regulations on crypto assets in Europe, what's happening around the world, about future of these interesting technologies, how we can also combine AI and blockchain. And now we have a fantastic panel, really great panelists, which I'm sure you have probably seen all of them in different panels, but we are bringing them together here to talk about DeFi, decentralized finance. And it's really my pleasure to host this panel. My name is Maria Minarikova. I'm the chair of the Blockchain for Europe Association. We're an association of several blockchain companies based in Brussels, but we combine the industry and we try to bring everybody together to have a discussion and really open dialogue with the regulators and policymakers to enable exchange of ideas and information and really education about these technologies that are being developed. I'm also working at Fetch.ai, which is a company that is combining AI and blockchain and really bringing these two emerging technologies together. We're developing other interesting, cool stuff in the DeFi space. One of them being MetaLex, decentralized exchange for crypto assets and for commodities. So future of commodities trading, hopefully on that platform. But anyway, we have a really great panel today, and I think I will ask everybody to introduce themselves a little bit, because we're hoping to also have a new audience. So DeFi is a really hot topic. So I'm sure we'll have some new people joining us and looking at our panelists and just kind of wondering, what is it that they're really doing. And so if I can just ask you one by one, and we will start with Jan Sisses and from European Commission. If you can give us a little bit of your background, what you're working on, and then we will continue. I will then introduce other panelists if we go one by one.
Yes, hello. Thanks very much for the introduction. Indeed, my name is Jan Sisses. I'm head of unit in the European Commission in our Department for Financial. I'm heading a unit which is focused on digital finance, so all matters of the digital transformation in finance. And as such, we have actually, we have proposed the markets and crypto assets proposals and the digital finance package, the broader one, and of course.
All right.
I hope that's what you wanted to. I mean, I was not just introducing myself, or should I already say something on the topic in a way?
Well, I can ask you, yeah. So when you hear the term tokenization and DeFi as a policymaker, what do you associate it with? Can you maybe elaborate on that?
Yeah, okay. No, sorry for the misunderstanding. I thought it was just a quick presentation round. Because of course I have a bit more to say for the panel which we have today, which is really a very interesting and fascinating topic. And I think first of all I want to say there seems to be some internet connection issues. I apologize for that. So I just hope it will go away and it's not too bad. So on our side, what do we associate with DeFi? First of all, I can tell you what we do not associate with DeFi. I mentioned already that we are working on the markets and crypto assets regulation, and that is a piece of regulation which basically is to be covered, which is, okay, sorry, I think there's still issues. So I will turn off my camera. That's the recommendation I get from the technical side. And I hope then it's going to be better. And I will do another attempt for that. I hope it is now better. If not, let me know. So indeed, we are working on the markets and crypto assets regulation, and that's supposed to cover indeed those crypto assets and markets which are not yet covered by existing financial regulation. Now, I would want to say DeFi, me can understand decentralized finance. This is actually a movement and a trend which has a much broader ambition. Cares about, in a way, one part of the financial sector trend, which is looking at all the areas of finance, whether that's banking, whether that's credit, whether that's insurance, whether that's other products, which are honestly, I mean, going much broader than MiCA. So MiCA is not and is not intended to be actually a regulation on decentralized finance. I think that's the first point I want to make. So decentralized finance is indeed a development which we are looking at very closely, and which provides, I think, huge opportunities, but also indeed challenges in terms of how can financial stability be protected if DeFi grows, how can consumers be protected, how can actually market integrity be ensured, and in a situation indeed where you do not have any centralized intermediaries. And that is, I think, the discussion which we are all in, which is a discussion which is at the start in Europe and the internet. Forward today actually to hear how you see the market developments of this, and how you see actually the interaction between indeed decentralized finance and the financial supervision we have in place, which indeed is there to protect stability, market integrity, and also to protect consumers. I think I would leave it at that to the start, and then happy to discuss.
Thank you very much. And you're not alone in having internet issues. I think it's on my side as well. So I hope we will get through this. But if we can continue, we also have a plan B. So next, I would like to introduce Fabian Schaller from University of Basel. Fabian, if you can tell us a little bit, about your background and also about DeFi. So it seems to be a topic that is really difficult to grasp. So if you can maybe try to normatively describe it to us, so we can have start this debate on equal footing.
All right. Hi, everyone. I hope you can hear me. Is everything fine?
We can hear. I can even see you really well.
Good. First of all, thank you very much for the invitation. I was really excited to be here and have discussion on this panel. My name is Fabian Schaller. I'm a professor at the University of Basel and the managing director at the university's Center for Innovative Finance. And as you already mentioned, my research focus is on public blockchains and on DeFi. I've recently published a paper with the Federal Reserve Bank of St. Louis on DeFi, which is an overview paper, and there are various other papers in the works. One we have already published, a working paper, is on basically the ownership distribution of various top DeFi tokens. Well, we have proposed an algorithm where you could distribute the tokens from the various protocols to their actual owners and see how concentrated or decentralized these ownership tokens actually are. And that was joint work with Matthias Nadler, a PhD student in our group, and there are various other research topics and research papers to come. Now, yes, I am really excited about DeFi. I think it's great potential-wise. I mean, it's really, when you think about it, this decentralized, open, transparent, and interoperable infrastructures that basically can replicate financial infrastructure in a more decentralized way, on a public permissionless blockchain, and that is really exciting. Now, what worries me somewhat, and I hope we also get a chance to talk about that, is that when people talk about DeFi, they have various different things in mind, and there is some form of topic creep or centralization creep coming into this topic or the description, where people are claiming they are developing DeFi protocols when in fact they have heavily centralized and custodial protocols. And I think when we talk about regulatory aspects of DeFi, when we talk about DeFi in general, it's really important to distinguish these two and to make the difference between actual decentralized protocols, so the DeFi as it's intended by the name, and then much more centralized ones. So yeah, I'm somewhere in between there. On the one hand, very excited. On the one hand, I can see the potential, but then also I'm somewhat worried that there might be this mix-up of the terminology, and that people actually refer to things as DeFi that aren't really decentralized.
Excellent. No, I think that's a really good topic to discuss. And decentralization, between centralized and decentralized, and there's a large scale. And I think I definitely agree with you that it's really good to have that defined, and really good to have defined what DeFi means. And we have here with us today also Marvin Amori from Uniswap. Marvin, if you can tell us about your role in the Uniswap and also what Uniswap does, and if you can elaborate on these innovations that you're bringing to customers and how it's different from CeFi infrastructures providing similar services.
Great, thank you, Maria. I'm Marvin Amori. I am the Chief Legal Officer of Uniswap Labs. which is a company that works on decentralized finance protocols and other tools. We built notably the Uniswap protocol, which is a smart contract on the Ethereum blockchain that anyone can use or call in order to exchange tokens and provide liquidity. And it's composable, it can be integrated in other DeFi use cases that need liquidity. So, in terms of the ethos of Uniswap, it's very decentralized. It's very much the Ethereum ethos. The protocol itself, you should think of it more like the internet protocol or the SMTP email protocol. It's something that's available for anyone to use. The company or no one else controls. It's almost, our role is almost like Satoshi to this protocol, and Satoshi doesn't control every transaction. We don't control any transactions as well. So what are the benefits? Why would someone use Uniswap rather than using centralized finance? One, it's non-custodial, right? People, as Fabian mentioned, people can hold their own tokens, hold their own keys, and people often don't want the custody of some of their assets to be held by a centralized entity. What are the risks of a centralized entity holding those assets? One, that entity could be hacked. Two, it might go down, right? There might be some problem with it being down. When it comes to the Uniswap protocol, the other thing that's beneficial in addition to it being non-custodial is it runs whenever the Ethereum blockchain runs, and the Ethereum blockchain never goes down. So if there's ever a moment where there's a spike and people want to move tokens or something in the market, often even great companies like Coinbase might have trouble keeping up with the demand and be down for a little bit. Ethereum has never gone down. The Uniswap protocol does not go down. It's very transparent. All transactions happen on the blockchain. A lot of these are pretty similar for other DeFi protocols, but everything happens on the blockchain. Everything's written to the Ethereum blockchain. And one thing about our protocol is it's very open to the point where lots of people have copied it. So we had version 1 of the protocol, then version 2 of the protocol, and that version 2 has been widely copied by other DeFi projects, and people have innovated it and they've taken it and they've used it on other chains, whereas we focus on Ethereum. So we have definitely seen that people have a demand for it, and we've been excited to see how people can use it and implement it in different ways. But my background, I'm a lawyer. I've been a lawyer for 17 years. I was primarily a lawyer for internet companies, navigating new issues and trying to figure out regulatory frameworks that worked in uncertain environments. And I began my career at an American law firm called Kirkland & Ellis.
Excellent. Thank you so much. It's actually interesting. People think that a lot of people, I think that blockchain it's all about techies, but there's actually so much room for lawyers now these days. Not just these days, but there has been, right? There will be even more as we have these new regulations coming in. So I would really encourage many people from many backgrounds to really get more involved in blockchain and really explore your opportunities here. Definitely for legal people. So we have another person with that background, Rebecca, with us from Aave. So if you can give us a little bit of your background, a little bit about what Aave is doing, and also how you feel, how you see yourselves in comparison to the C5 infrastructures.
Yep. So my name is Rebecca Rettig. I am the general counsel of the Aave group, or the Aave companies. They are a group of software development companies headquartered in Europe that develops blockchain-based software and other financial technology. We've developed the Aave protocol, which is a decentralized, non-custodial, open source liquidity protocol. It allows users to supply and borrow certain crypto assets and earn interest on those assets. And prior to joining Aave as general counsel 3 months ago, I was in private practice in New York. I started my career at a law firm here called Cravath, Swaine & Moore, and then was a partner in the financial services group of a large law firm where I basically spent the last 4.5 years servicing blockchain and crypto clients and spent the last 2 years focusing intensely on DeFi, doing regulatory counseling, and then also representing various companies in different types of litigation, regulatory enforcement, and the like. So I've really thought a lot about decentralization and its import to this. I agree with Professor Shar that there's a lot of use of the word decentralization where it doesn't fit, but I do think there are two ways to think about decentralization. One, what Marvin was talking about before, these protocols are developed, are deployed to the Ethereum network. So they are automatically decentralized just from that technical perspective because Ethereum is decentralized. But I think when we're talking about this concept of decentralization theater or using the term decentralization without actually having there be the company behind the software not having responsibility for it anymore. That's true. I think a lot of times there is a progression or a timeline or a spectrum of decentralization where when you initially deploy the software developers may not step away immediately. They may still have what are called the admin or administrative keys, which allows them to make changes to or upgrade the protocol. As far as where Aave is now, we deployed version 2 of the protocol in January of 2020. The admin keys belong to governance. So a group of about 70 or 80,000 token holders of our governance token who can make proposals to change, amend, upgrade the protocol, the token, and things like that. And they can also vote on those proposals as well. So we are both decentralized from a technical perspective because it's deployed on the blockchain, and also from a true governance perspective where we are not involved in the administration of the protocol or the maintenance of it on a day-to-day basis.
Excellent. We'll ask Fabian a little bit later whether he also thinks that these are true decentralized protocols. But first, let me just introduce Sumedha from WEF. Sumedha, thank you so much for joining us today. If you can tell us also about your background, what you're working on at WEF, and also how would you locate DeFi based at the level of impact it has on existing financial markets among other globally disruptive trends. I think that's a part of your work. So if you can tell us a little bit about that.
Absolutely, and thank you for having me. Hi everyone, my name is Sumedha Deshmukh, and I work on the blockchain and digital assets team at the World Economic Forum. And we are really focused on thinking through policy frameworks and tools that can help policymakers and regulators accelerate the benefits of technology while mitigating some of the risks. And so our team is focused specifically on various aspects of blockchain and digital assets, and decentralized finance is one of them. So you're actually catching us at a really good time. We just yesterday released a decentralized finance policymaker toolkit, which some on the call were actually involved in writing and creating, and it's designed to be a clear and concise guide for policymakers and regulators who are navigating this very quickly evolving space. And in terms of the World Economic Forum's kind of view on it, we're really watching this space with great interest. I mean, I think with everyone else, we saw all of the growth that happened over the past year. There are a lot of really intelligent people that are working on many of the projects mentioned already, and really thinking through how can we use decentralized technologies to disintermediate financial services, create potentially new services, and use an ecosystem, or create an ecosystem rather, where people may be able to enter without some of the challenges or barriers that we've seen in traditional finance. So part of our job at the World Economic Forum is how can we create kind of tools and resources for policymakers and regulators to wrap their mind around this space so that we can think about balanced, smart regulation that won't necessarily hinder innovation, but we'll think through really important concerns like consumer protection and those that policymakers and regulators are focused on. And you know, I think that's going to be a big part of the equation of what you asked, of how much and to what extent decentralized finance will be able to disrupt traditional financial services is, how regulation proceeds, how much of the decentralization happens in the governance, which was discussed earlier. I think there are a lot of different factors that are at play. So we need to be very vigilant and mindful of how these things can evolve and will evolve if kind of given the space and the education around a lot of these topics.
Excellent. Thank you so much. No, really interesting work. And I'm glad that this is all a very timely discussion. So I will go back to Fabian now, since we have a couple of protocols that are saying they're decentralized. You've done your research. So what do you think are the key, perhaps misunderstanding about DeFis, and how do you think that the regulators, what they can do or what we can do to differentiate between the different types and layers of DeFi? So are we, looking at the right things? Are we looking at the right regulations, or what are your thoughts on that?
Well, first of all, I'm not going to comment on any specific protocol, and I wasn't necessarily referring to the people that are today on this panel, right? I mean, there's a large universe of DeFi protocols, and some of them, and we also heard that, aren't even on a decentralized blockchain. And I think when you talk about decentralization, and that's potentially where I slightly disagree, you have to think in this layered approach. So first of all, you have the blockchain, and of course, when the blockchain itself is not even decentralized, when you have a heavily centralized database, then it doesn't really matter what you deploy on top of it, and everything on top of it will also be centralized because you can just overrule it, right? So it's essentially like a prerequisite or a necessary, but not necessarily a sufficient condition that you have it on a permissionless public blockchain or a decentralized blockchain. And then on top of that, you have the tokens, so the asset universe, and also, I mean, tokens are nothing other than a smart contract where you will also have additional conditions in there or backdoors in there. And for some of the tokens that are out there on these blockchains, that is the case, so that you have blacklisting or expropriation functions. And then again, on top of that, you have the protocols, and that's really the part we're talking about. So only if you're using a blockchain that is actually decentralized, if the token is somewhat decentralized that is employed in these protocols, then we even get to the point where we can discuss these protocols. And then the main things I'm usually concerned about is things like admin keys that are held just by one person or by a heavily concentrated group of people. If it's somewhat distributed, if there is a great process from creating them and distributing them, that's might be okay. But for some of these protocols, it's really just one person. And then, of course, when we talk about tokenized governance, then it might be the case that these tokens are, again, just controlled by a few people. And that's also something you have to look into. So I guess what I was trying to say initially is that regulators, they shouldn't just regulate something or not regulate something because it has the label DeFi. There is a large variety of DeFi protocols, and you have to look into the details, have to really understand the technology and see what's going on before you can make any decisions. And it really ranges from completely decentralized, where there might be no need for regulation, and also the effectiveness of regulation isn't really given, to something that is heavily centralized, where you definitely have to step in, but we already have the tools in place.
Maria, I'm probably going to burst your bubble here. When I look around this panel, I don't think a debate's going to break out, right? A lot of us know each other, work together, admire one another, and we're working through these same issues together. So, but I want to sort of build on what the professor said, right? He mentioned the protocol, right? Ethereum is a protocol that, really has these interesting values around decentralization. And there's a trade-off that sometimes is made in these protocols, right? Because there are some downsides to decentralization and some benefits, right? So one thing about decentralization is it might make the protocol slower and more expensive. So there might not be as much throughput. There might not be as many transactions that get through. People might need to pay a little more to get those transactions through. Some of these chains that are less decentralized, that are more centralized, they have speed. Transactions will go through more quickly. They're cheaper. And the people who are in that space are essentially betting, hey, you know what? People don't really care about decentralization. They don't care about this value that makes it permissionless and available to all. What they really care about is speed and cost. That's kind of the bet that those people are making. But I think what the professor is saying is, let's just be honest about that. You're not actually decentralized. You're making a bet and you're pretty centralized. But that's sort of at the protocol level. And it's a trade-off. Who knows will win? Right? It might turn out that people just want cheap transactions that are fast, right? Once you go up, right, but we Rebecca and I, both on the Ethereum blockchain, both very much on the decentralization camp, are, we believe in these values. We'd like to see them win, and we think there's a place for that. When you go up the stack to sort of the governance that Rebecca mentioned, I think we also have a governance token with a very broad, very kind of empowered community. I think the kind of intellectual forebearers of this kind of community is the way open source software was developed and run back in the late 90s, 2000s until now. The Linux Foundation, the Red Hat Foundation, the Linux Foundation, Mozilla, all these different groups that collectively build and manage software and that kind of build an ecosystem around it. And so, for a lot of folks that come from the finance world, it looks a little weird and foreign to see a community shepherding software this way. For those who come from the software world, especially the open source software world, these are where a lot of the norms and decision-making structures come from. So those are just two thoughts on that.
No, absolutely. No, I think this is what we should be doing here, not having just very nice conversations because we're here, but actually, talk about these things. So I would like to actually invite Jan to give his point of view from the form of regulation, right? So we have had, as you have been one of the authors of MiCA, maybe could you walk us through the thinking of the European Commission about why you have not made DeFi actually part of this new regulatory framework? What are your thoughts or approach?
Yeah, thanks. No, I think the discussion has brought to the forefront. I think essentially there are two questions here. One is basically indeed to what extent is something decentralized or not, and then you can look at this from the technical level and from the user level, and you could look at this from the regulatory level in a way. And then probably, you have some considerations like level playing field or kind of same activities, same risk, same rules. If in the end you are controlling a firm, and whether you call it a traditional firm or a DeFi firm, basically in the end, let's say if you control a firm, then you're responsible for the regulatory compliance, basically. And so the first question is indeed we need to make this distinction. And I would say this is a question which is not probably in the first instance a regulatory question, but it's really also a supervisory question. So it's really up to the authorities to see. And I think Fabian has mentioned some of the elements he's looking at. I think probably the supervisors, let's be very honest, are at the very, very early phases of seeing what kind of criteria they need to look at. And I think one of the things we just need to be doing is indeed to make sure that there is more experience with these things and that these things are being properly understood by supervisors and they can probably draw this distinction basically. And so I think that's the first issue we have to look at. But I would honestly, this is not a big intellectual question, it's more a practical question. And one needs to find solutions which are in essence fair basically. And you don't treat the same people differently just because they call it differently. And then I think the second question is, if you're on the, let's say, on the truly decentralized part of this kind of distinction, well, what's then your situation? And I think today the situation is clear, and in MiCA the situation will remain clear. You're not regulated then, basically. But I think prospectively, if this sector is going to have success and is going to grow, which I think is a possibility and maybe a welcome possibility even, sooner or later, I think the question at some point will arise as well, is if more and more people are putting their money into that, if more and more consumers are actually exposing themselves here, is there a need actually for regulators and supervisors to look at this? And that's where it gets, I think, intellectually really challenging. I find quite interesting as well, but also very, very difficult, because then indeed, if you do not have actually regulated intermediaries, how do you then actually safeguard financial stability? How do you protect consumers? Is it just through the technology, just through the code? What is the role for the public authorities in this? How can politicians in the end make sure that if their citizens lose their money and they turn back to them and say, well, why have you not protected me, that they have a good answer for that? So I think that's the second set of questions. So I would like to distinguish those. The first one is the distinction question, where's the divide? And the second one is basically, and that's even more, looking in the future, if the sector grows, basically what's the supervisory and regulatory situation on this?
Can I jump in quickly and just
build
on that? So I think in terms of thinking about regulation, the question of this financial intermediaries is really important, because while I don't know and can't necessarily read in different languages regulations all around the world, the regulations that I do know about and am familiar with really think about financial intermediaries for a few reasons. One, they are written that way because financial intermediaries, whether they're an entity or not, are run by humans who have subjective abilities to make decisions one way or the other. And while we'd like to believe that everyone is always acting in the best interest of consumers, the regulations are meant to ensure that whoever is making these subjective decisions do so, right? So if consumer A says, I want to enter into this transaction with consumer B, the intermediary ensures that it happens in the way that consumer A and B have agreed on it. And so for that reason, the regulations always use the word person or something along those lines, which means a natural person or an entity or something like that, in order to ensure that this happens. But when you are building something through smart contracts, there's an automaticity so that consumer A and consumer B's transaction happens immediately, exactly as they want it to, without any question, and can give them certainty in their transactions. So applying these regulations that ensure that subjective humans in between A and B are acting appropriately to software developers who've created smart contract-based protocols that operate automatically doesn't make a lot of sense. Now, do I think that there needs to be consumer protection laws in place in terms of ensuring that users are protected in the event of, let's say, a shortfall event or something like that? Yes. But I think consumer protection laws are very, very different than the types of, and really are usually a disclosure-based system, ensuring that there is a lot of transparency around the financial system or whatever. And there is a lot of transparency inherent in the system. One, you can track every single transaction that occurs on these protocols. You can see it historically. You can see the wallets you're interacting with. So there's a lot of transparency that way. And I can say from my time when I was in private practice dealing with law enforcement who was trying to track down, let's say, illicit funds and stuff like that, the transparency of blockchain was extremely helpful, especially to be able to say, we don't have any, my clients don't have information that's different than what's accessible to you. So that's one, but there's also transparency because that's part of the ethos of DeFi. So when you go to like the Aave docs page or the Uniswap docs page or other protocols docs pages, you have pages and pages explaining exactly how the protocols work that are accessible for literally anybody to read as long as they have an internet connection. And so I think that certain of the purposes behind the regulations have been mooted just by the inherent features built into the technology.
Anybody would like to comment on that?
Can I? I was just, it was just me before, but I mean, I fully agree with that this is a kind of something which can be looked at for indeed more the disclosure-based consumer protection rules. But I mean, at least the financial supervision regulation we have today goes a bit beyond that. I mean, we have supervision to make sure that markets are not rigged. And if you are putting up a trading platform, you need to somehow demonstrate that your systems are fair and everything else. So that's not something which consumers or investors can monitor all by themselves, I guess, especially when you're looking into the retail space. So that then is the question, well, how do you do that? You have questions around liability. You have questions then if you really these systems grow, if there are problems, if there's a theft, a hack, who is liable? And that's not only relevant for the consumer, but even for finance. If there's a run basically, which can accelerate, that may have broader implications. So I agree that there's some areas where it's really information-based, that there can be relatively good solutions and maybe even better solutions than in today's world. But I would see that there are other issues around where I see that. I
think we're kind of losing Jan. I'm not sure. Can somebody else hear him, or is it just me?
I think he's gone.
No, I'm still there. Sorry.
Okay, please. Sorry.
You lost me. When did you lose me?
Like,
well, I was just to say. I mean, my conclusion was that I tried to summarize. my conclusion was, I think there are some areas where disclosure is good, and that's where indeed also DeFi can work. But there are other things where you today, at least in the regulation, rely on active monitoring by financial authorities, actually, because it's about market integrity, which is not just for the individual consumer or about financial stability. And that may be a bit of a different situation. So there I see less yet the clear solutions that DeFi can address all those issues.
If anybody would like to comment, or
yeah, I mean, I agree with that, but then again, the requirements on what you have to ensure to make these markets fair and to actually guarantee that these markets are fair might be much lower when you have something that is completely transparent and deployed in a public blockchain than when you have something that happens behind closed doors and somebody has, as Rebecca said earlier, arbitrary decision-making power over that. I mean, obviously, then you need audits, then you need much stronger scrutiny. But when you have something deployed where you have the embedded rules in a smart contract on a public blockchain, that, I mean, it doesn't get any better in terms of transparency than that. Now, to be fair, I've recently written an article for CoinDesk where I argued basically the opposite and said DeFi isn't as transparent as people usually think, because it can be really hard to get the information out there. So it's not that easy to interpret and to make sense of it on a macro level. But the difference to the traditional financial system is that the information is there and everybody has access to it. And the only thing that may be missing is the researching power. But I mean, it's there, and that is exciting.
And just to add on to that, I think part of it is identifying and being able to articulate that value to customers. And so I think a lot of the frameworks we have today are obviously based, like Rebecca said, on the systems of the past and may not be able to consider how decentralization may be of value to customers, how censorship resistance and some of the values that come with DeFi could be useful. So I think that's another side of the coin when it comes to regulation and policymaking, is how do we assess what new values decentralized finance could bring and kind of bring that into the fold when it comes to thinking about these decisions and how we're thinking about the trajectory of policies and regulations. And I think we may have lost your video, Maria. Oh, there you
go. Apologies, a little bit technical glitch. Sorry. No, I think these are all very interesting questions. I think I think we're touching now on the question of the products, right? How is this beneficial? And I think this is why we're all doing this, and why we're doing this. We want to innovate, to bring new products to the space, to offer new opportunities to consumers, and using blockchain as the technology, because it allows us to do something new. To decentralize and to decentralize, on different levels. And so I was just wondering how you feel about the innovation part, how and the lack or the maybe over regulation, how you think about that in your respective companies, Marvin and Rebecca. Are you guys, looking over your shoulder, like what is happening in terms of regulation, or are you just going out there and really innovating and just, bringing things to the market?
So we definitely have lawyers, and a lot of them that we talk to. Rebecca used to be our outside lawyer. I've been involved in startups and tech companies that have done quite, so an outside lawyer to Google when it was quite small. An outside lawyer to Dropbox when it was very, very small. And generally you don't hire a lawyer when you're your first 10 or 20 employees, right? Startups usually have a lot of engineers. The law is usually pretty settled. In this space, you bring on an experienced lawyer pretty early on to think through some of these issues and to grapple with them. And I've got to say, DeFi has grown so quickly that policymakers are trying to catch up, but also the companies involved themselves are trying to catch up, right? Things have just moved so quickly in terms of onboarding lawyers, thinking through issues, meeting with regulators and trying to understand what's the best way to actually bring this innovation to life and protect people, right? Because we want to do both. So there's definitely, I would say, we all want more clarity. We want rules that actually help benefit these protocols and help them grow. But we definitely, do our best, spend a lot of time, with our leadership, thinking about how do we do this in a legally compliant way, but also if the law is completely vague, in the most responsible way that we can in light of what we control.
Yeah, and I think this is one of the issues perhaps that we're also seeing ourselves, is that, you want to innovate. You're thinking about, how you can connect different things in the blockchain space, or also maybe in our case, also like machine to machine economy. But then you also have to try to evaluate all these regulations, or at least thoughts on regulations. And it, as you mentioned, there's a lot of lawyers that are involved. So this is in a way stifling the innovation in that way, that you're a bit slower than you would be otherwise. And you spend, as a small company, this may be an issue for some small companies, because they don't have the extra 100 or 200,000 just to spend on the lawyers. So maybe this is something for the regulators to think about, really, and to either clarify that, but make it less ambiguous, what they're thinking. I don't know, Rebecca, what is your experience, or Marvin?
I want to add just a tiny bit to that, if you don't mind, Rebecca. Which is, and this is not a huge problem, but could be a huge problem over time, is you do have a set of projects, protocols, companies that are trying to do their best when it comes to compliance and being responsible. And then you have others that are not, and might be innovating more quickly and doing it right. And there might be, and I don't know how this will shake out, but I think there are situations where the kind of cowboys end up getting ahead versus the cowboys are the bad guys here, versus the folks that are, really trying to do it by the book. And so there are moments where, we see what other folks are doing in the market, and we're like, can we do that? It seems like some consumers want that. And then we might hold back because there isn't enough clarity. And so, I'm not like begging for clarity. I'm just saying, often the folks who are most willing to work with regulators might be the ones that are most hamstrung and slowed down in the market. You might end up in a situation where the folks who have the fewest lawyers and maybe scruples end up ahead. And that, I don't know if you get that feeling sometimes, Rebecca. I mean, I feel like I've not to call out an analogy in the centralized exchange world, but I do feel as though some centralized exchanges kind of move more slowly in certain countries because of the regulatory compliance versus others that are now much bigger. And you sort of see that had there been a little more clarity, those companies could have, I think, gotten bigger more quickly.
I think operating in a gray area is very complicated, to put it mildly. And one of the things I used to say when I was outside counsel, and obviously that I still ascribe to now, is this concept of being a good actor, even when you don't know or believe that the regulations don't necessarily apply in the same ways that they did. There are just certain things, and I think this is Marvin's point too, which is sometimes being a good actor slows you down a bit. It takes a lot more work to figure out how to build in compliant solutions, or things that may be helpful just from a legal and regulatory and compliance perspective, to the technology. But I do think long term it is worth it, not just because being a good actor is the right thing to do, but I think it'll also help bring regulators along in understanding the benefits, and that there can be a new financial system that also can protect consumers, and in a variety of similar, but even if they're not the exact same way that they do in the legacy system.
Yeah, and I would actually like to ask Sumedha, what you know based on your work with DeFi projects, where would you place Europe in regard to DeFi adoption or implementation in the next year? So you've just done this research, and we're just talking about all these issues or maybe gray areas. So how do you see that from the global perspective, and where do you see Europe in this?
I wish I had a crystal ball to kind of give predictions like that and have them be accurate. I think that would be amazing if I could. But I definitely think we're seeing a lot of activity out of Europe. And as mentioned, a lot of these projects are headquartered out of Europe. There's a lot of activity going on there. To kind of put a fine point on what Rebecca said and to bring in something that Fabian said, I think part of what's important in this space is all projects aren't created equal at this stage, and it's going to be a long evolution to decentralization for some of these projects. So I think that's something that we'll be kind of paying close attention to, and something that's needed as we think about policy and regulatory approaches. And so that being said, obviously, I know Jan mentioned that Mika isn't covering DeFi specifically. I don't have specific insights on plans. Maybe he's the better person to answer the question on what the policy and regulatory outlook will be there. But I definitely think it's a space that we're watching closely and with great interest, especially as they've been kind of a lot of the first movers on some of the crypto asset regulation, as we're seeing now.
Jan, maybe, I don't know if you have a crystal ball. I wish I could have one as well, by the way, but since we don't have it, maybe we'll just ask you for your thoughts and you know, what do we do in Europe? How can we move forward in this in these uncertain times?
I think there are two elements. One is, I think, indeed, in Europe, we're always trying to look at these things together. So basically, I mean, you get clarity for one member state, you get clarity for all of them, basically, with the passport. I think that's something which facilitates the discussion. I think the second point I want to make is that I think we appreciate the need for legal clarity, but I mean, it's a tough thing in this innovation space, because like I can give you clarity today, but probably I will give you the wrong rule. So basically, that's probably not the good choice either. I think on DeFi particularly, I think on the crypto assets with Mika, I think we've shown that, I mean, the moment there is clarity and there is a way forward, we're willing to put things on the proposal which are very clear and very comprehensive. But on DeFi, I'm personally afraid, I mean, we don't have all that clarity yet. So I think for me, this is a space where we need more work in innovation facilitators and sandboxes, which various member states have put up, and in exchange between industry actually and supervisors to learn more, because I don't think we are there yet to be able to design the system and say that's the right rule for DeFi basically. So I think while we appreciate the need for clarity, I think this is an area where we first need to have a bit more understanding and experimentation and mutual learning, and that's what I think from our side we're willing to encourage. And I think it's also probably in the end the best way forward.
Fabian, what are your thoughts on this? I mean, what can we do in Europe? You're also in Europe. I'm based in Europe. How can we bridge this? Perhaps education is one of the gaps. But what else?
I think so. Education is key, obviously, and I think that was a really good remark earlier, that it's important for policymakers to actually study this technology. I think that's really important. In terms of what we see currently with the protocols, they're really two extremes. So currently you have protocols that are somewhat in the middle. There are some centralized parts to it, mostly decentralized. But what I expect is that some of these protocols will move closer to regulation, and at some point might even merge with traditional finance. And then you have all the protocols that go further and further in the direction of decentralization. And I think if I can give one key takeaway from my side, something I think is really important for policymakers to get comfortable with, because there is no way getting around that, is there will be certain decentralized entities. There will be certain completely decentralized smart contracts, and you will not be able to regulate them. Now, this might not be true in many cases. In many cases, there are admin keys, there are oracles and things you can intervene, but there certainly are some protocols where you absolutely have no way of intervening. And the only thing you can do and should do in this case is regulating on and off ramps, and that is sufficient. Something I've heard a lot, and that worries me also a lot, because that would be a really, really, really bad idea as far as I'm concerned, is regulating developers and making them responsible for code they have written. I think that would be really counterproductive, would be a really bad idea, because these developers, they don't have any special control over that code once it's out there. It might even be someone else who deploys it. It can be forked, it can be used by someone else. In many cases, when it is deployed, when it is up and running, they cannot remove it anymore. So the only thing you're achieving when you're regulating developers like that is you're putting the innovation, you're pushing the innovation in an anonymous realm. So basically, where you will see a lot more of these anonymous deployments, and that would be a really, really bad idea. So I think, yeah, again, we have to get comfortable with the idea of having decentralized organizations, and I think that's really important to understand.
I would just like to go back to Jan again, not to put you on the spot, but just what are your thoughts on this? What Fabian has just shared with us.
I agree with Fabian's position on the developers, but what avoid, let's say, regulating developers? I mean, there are two ways to getting there. One is simply to say, well, we have to be accepting a situation where simply some of this is not regulated. And that is a possibility, but there is also a risk that some supervisors will just not be happy with that. And that can be financial supervisors, that can be data protection supervisors, that can be many others. And they will simply say, no, that's an option for us. And that is why I would also encourage to think about the alternative option to in a way say, well, if it's not the developers, how then, if policymakers and parliamentarians, if they want to have some oversight in the space, how exactly, what are the good options? If regulating developers is the bad option, what's the good option? Otherwise, I'm afraid we may at some point come in a situation where policymakers all of a sudden may realize, well, maybe people have lost their money here, we need to do something, and well, they don't have any good options in their pocket, so they go for the developers. That's just what I would, in terms of the way forward, I would really encourage. That's why I think it's so important indeed to have kind of further dialogue, because I'm convinced that there can be ways, and I think, I mean, Rebecca and Marvin mentioned some of, to provide kind of comfort to policymakers, but they need to be further developed. Right now, I just don't see yet they are extremely.
Can I quickly respond? Is that okay?
Yeah, please.
Yeah, and I have something to say too after the professor.
How did that it ended with extremely? I think we lost you after the word extremely. But
okay, well, let's have Fabian, and then we will have Rebecca, and then Marvin.
Just really quick, yeah. I mean, this may be true for certain protocols when you have somebody who's representing the protocol, when you have some governance mechanism where you can talk to people. But again, when we're talking smart contracts, there is always the option that you just have a static smart contract, that the infrastructure is just out there. I'm not doing that, but let's assume I would take the code for a really simple decentralized exchange and just put it out there. No admin keys, no outside dependencies whatsoever. It's up and running, and you have nobody to talk to. Even if you talk to me, I cannot stop it. And that's something that will happen. Whether we are comfortable with it or not, that's something that will happen. And the only thing you can do and should do in that case is regulating on and off ramps. And again, DeFi is a spectrum. I can see when you have a protocol where people represent that protocol to some extent, and I mean, Rebecca and Marvin, I maybe you disagree, but I would say you're not really representing your protocols, right? I mean, you might be. It's right. So even there, it's questionable when you're talking to regulators. It's questionable whether you're actually speaking for that protocol. So honestly, I don't think that it's possible to regulate these protocols to the extent that you're imagining it. And the only thing you can do is regulating on and off ramps.
I could not agree more on the regulating on and off ramps. One of the things that I talk about a lot is that we still live in a fiat dominated world. And so we have a closed system in crypto, right? In order to get into or out of it, you have to change fiat into crypto. And the only way to really do that is through these on and off ramps, centralized exchanges and the like, because they are all financial intermediaries, obviously in a new crypto world, but in the way we think about them, they take custody of assets, they have control, they have a lot of information that's not transparent. And so most of them are all regulated entities in some way or the other, whether it be money transmitters and the like, and thus usually have licenses or are registered with some form of regulatory body. So to enhance, first of all, there's a very, very low amount of illicit funds flowing in and out of crypto. There was a report that it was about like 1% or a little more than 1% of crypto transactions are with illicit funds. But even putting that aside, the way to enhance the security around this closed systems is to ensure that the KYC and AML is even stronger than it used to be when you do go through these on and off ramps. So that's one. To speak to Professor Shar's point, no, whenever I'm speaking to a regulator, and I think I can say this for Marvin too, we are representing software developers who are continually innovating and building new and different types of blockchain-based software. The only people or the only person or the only entities that speak for the protocols are the token holders who govern the protocol, and they're not engaging with regulators because they're this diffuse group of token holders. And as I said, I don't think, and I agree with Professor Shar, you can't regulate a piece of software. Now, what I suppose you could do is put in standards that software developers have to adhere to as they are developing new trustless blockchain-based software. But there's a lot of that happening in the industry anyway. There's a lot of discussion about a self-regulatory organization. And I think that given the transparency, software developers really want to show their responsibility. So all of our security audits that happened on the protocol are public for everyone to look at on our docs page. If you just Google Aave security audits, it'll take you directly to the page and you can see third parties audited the software. I think we had 6 or 7 audits before we deployed it. I'm sure the same thing is true for both V2 and V3 of Uniswap. And so a lot of that is already out there. And I'll say there are continued compliance solutions or consumer protection solutions being developed. So there is definitely insurance that you can buy, like DeFi insurance, but we've also developed a separate protocol which allows users to stake their governance tokens, earn rewards with the acknowledgement that in the case of a rare shortfall event where something may happen that is unexpected to the protocol and users of the protocol lose funds, then those who've staked in the safety module can have governance vote to use 30% of the funds there. And there's 1.9 billion worth of funds in our safety module now. To have 30% of those funds cover individuals who may have sustained losses in the shortfall event. And so the industry is constantly innovating ways to protect consumers that may be different than what regulators are used to, but it's still happening. And it's not just through these disclosures and things like that. And so I think it's really important for regulators and industry participants to work really closely and to be particularly collaborative when trying to understand whether regulation can apply, and if it does, how it applies at all.
Absolutely. I couldn't agree more. And I think we are coming back to this topic of education and really bridging this understanding between the regulators and the industry, and with the help of the educational institutions to really bring everybody together. So I think this is just a recurring theme in the last, I don't know how many years, but it's just becoming, I think, more and more apparent, especially in the DeFi space, because I think in general, I think the blockchain, the consensus and all these, how that all works technically is being understood. But I think the DeFi is bringing up these new paradigm shifts in really like what real decentralization means. And I think that is still not understood. And the implications of that are still just not understood enough by the people that are then, creating these regulations and policies now. So I think there's much more for us to do as, industry. But yeah, I think those are really very good points. So we have the last few minutes, just maybe like your quick wish for the next year or two, if you had one, what would that be, Marvin?
My wish would be to clone Professor Shar and have lots more academics thinking about these, and Sumedha, right? It's people like Rebecca and me have so many things coming at us at all times, and this is obviously one of the most important. But having folks who research this, think about it, study it, are out there trying to educate folks in a unbiased way is great. So just being on this panel, one of the things I was thinking of was, it's the more folks that come to the space and are thinking about it deeply, probably the better.
Yeah, absolutely. Samida, what would be your one wish? Because we only have 4 more minutes, so I think we'll just go through everybody. Everybody will have like early Christmas wish, and then we'll conclude the panel.
Yeah, I think just continued collaboration between industry and policymakers and regulators. I think that's the only way we're going to get to an understanding of these things, and kind of that continued education on both sides of what the objectives and goals are. I think we've seen a lot of success with that in the model with the World Economic Forum, and I think that's a lot of kind of the hard work that it takes to get to policies and regulations that make sense.
Fabian?
Yeah, there's so much financial innovation currently. I've never seen anything like that with DeFi. The speed and just through this composability and interoperability, and that's really exciting. So my wish is, please don't mess it up with overregulation. That really is my wish. Don't try to step in, even if some of these protocols might have some centralized aspects, as long as it's not too bad. Talk to them, try to find solutions, but let them innovate. I think that's really important.
Fantastic. Rebecca?
My wish is the same as Professor Shar's. I want to, because I think there needs to be this continued collaboration so that we can really allow the system to grow in an open way. I think one of the things we haven't talked about on this panel is what the promise of DeFi offers. So yes, it offers this great new financial system that all of us who also are participating in the legacy financial system can participate in, but it also offers a lot of promise for disenfranchised persons and others who've not been able to participate in legacy finance to be able to gain financial independence. And while DeFi is 2 years old, so there's no great look, it's everywhere now, I think that there are not the roadblocks in DeFi for people in developing countries or other disenfranchised groups to get involved in this new financial system that we know exists and have precluded them from legacy finance for forever. So I definitely don't want to see it screwed up. And my other personal wish is to work more with Professor Shar in the next 6 months or the rest of the year to think about how to make sure we get this all done correctly.
Excellent. No, absolutely. So we definitely need to clone you, Fabian, and to have more of you.
But I have to say something now. I mean, I'm just researching that the other people are actually doing the work and developing these protocols. So please stop.
No, but I think it comes back to really the importance of having education and having the industry involved. And we'll give Jan the last word to see how they can hopefully support us in the policymakers and regulators space. If you're still with us, Jan?
I'm just to start with, I'm simply quite happy. Yes, I'm still with you. Do you hear me? Not really.
Yes, we can. It's a bit.
Yes, now you hear me.
Yeah.
Okay. It has a bit of a lag. So, no, I mean, to start with, I think I'm really happy. When we came out with Mika, we weren't sure whether, I mean, several people said, yes, we're now expecting the European DeFi regulation. I think our choice was not to do that. I think I'm quite happy to see also that this is shared on the panel, that this would have not been the right approach. And for the rest, I very much agree with what was being said. So I think we need more clones of Professor Scher. I think we need more clones of the kind of educated companies who actually can work with the supervisors. We need more clones of the supervisors and public authorities who basically have an understanding of this. And we would very much looking forward to this continued debate and mutual education on this thing.
Excellent. So I think that was actually a perfect conclusion. Yeah, please go ahead.
No, I wouldn't call it a debate. I would call it a conversation. That's what I would call it.
Yeah, definitely. So thank you so much.
I agree also because it needs to be a mutual one. I think everybody needs to be willing to learn and to develop, I think.
Yeah. No, absolutely. So I think the conclusion is to have more discussions, to really have open discussions, to understand each other and to come up with something that can, at the end benefit the end users and the customers that are using, all of us that are using these new ecosystems and based on blockchain. So thank you everybody for this great panel. Thank you so much for your time. And I really hope that we can also with Blockchain for Europe, we can continue this discussion and actually enable it. So I welcome you to, to discuss this with us again, and we will be happy to organize that. And I'm giving the word now to Robert to close this great summit. And thank you everybody for being with us.
Thank you guys. Great panel.
Thanks.
Really appreciate your time. I'm really sorry that you had some issues with your tech, Jan, but luckily we could hear you, and that you stayed with us. Appreciate that. And yeah, I think that was a great debate. And I think the good thing is we're all aligned on what we need to do. So everybody basically has some work to do, and we will happily support that in the best way we can, obviously. And yeah, and assuming that everybody that is working in the space, looking at the space, and hopefully gets excited by the space, stays with us, and hopefully supports us, supports the industry. And yeah, I mean, I think looking back at where we started 3 years ago in a room with 100 people, and today just got the numbers, we got like over 1,500 participants. So there's quite an uptake in interest. So I'm definitely sure that next year will be even bigger, and there will be even more interest. There will be more to be done. And yeah, let's just do the best we can, and that's it basically. And on this note, thanks to everyone. And I just want to thank everybody that joined, and we hope to see you all next year. And on this note, as a last hint, we have a half-day session tomorrow on the Blockchain for Europe Summit on a specific focus with the UK. Please join us there, where we go into a bit more detail on what the UK is doing, which is still part of Europe. And we want to keep it that way and still closely collaborate, and hope to see you all there. Thanks. Have a good day.